The clock ticks to the close of the old year. Before we know it, we will be making New Year's resolutions. Time to reflect and look ahead, and that means reassessing and recalculating everything, especially our finances. A new year, a new budget brought by a new government. Hello and welcome to On the Record. I'm your host, Jerome Sawyer. Still shy of the first 90 days in office, the PLP government is making some adjustments to the national budget as we prepare for the end of the year and look ahead. Tonight, we look at the economy in review, what has happened and what's ahead. All that on the record tonight. Our discussion begins on the other side of this break. Every new season of On the Record, we push the limits, venture into unknown territory, take our cameras into places unseen before. We share the stories and experiences that affect us all. And now it's time for Season 5. On the Record, Thursdays at 8 p.m. on RTV, cable channel 212, and streaming live on Facebook. Welcome to our show tonight. It's all about the economy in review, coming off of another international downgrade, the threat of yet another wave of COVID-19 in the form of the Omicron strain makes these unusual times indeed. Here to try and make sense of it all are some experts who know way more than I do about this topic. My guest, first guest that is the Chief Executive Officer for the Bahamas International Securities Exchange. Welcome, Mr. Keith Davies. Welcome, sir.
Thank you.
Also joining us is Nolan Johnson. He's the trading representative and managing representative for Alliance Investment Management Limited and the trading representative and advising representative for Benchmark Advisors. Nolan, welcome to the show.
Thank you for having me.
Gentlemen, I want to first of all set the scene looking at where we are economically. For most people, when you talk about the economy, it's dollars and cents. How am I, getting from one paycheck to the other? How am I paying my bills? How am I surviving? That's what the economy means for most of us. But there's such a larger picture that we don't always, I think, pay attention to or even understand. So I'll sort of set a bit of the groundwork for the discussion. Mid-November, credit agency Moody downgraded the country's sovereign credit rating to a B+, with a stable outlook, noting that a debt burden has climbed to almost $2.4 billion, or 86.6% of the gross domestic product, citing that in the past 2 fiscal years and successive governments, they failed to implement timely and effective fiscal reforms. When I hear that, I think, good Lord. When you hear downgrade, when you hear, the debt at $2.4 billion, it almost gives you a bleak outlook as to where we are in terms of a country and what our prospects are. But for the average person listening to that, what does that mean every day for us?
Well, first of all, we went through a very tough period. The world went through a very tough period. And I'm being generous when I say tough.
Yeah.
The reality is that, personally, the downgrades don't scare me. The impact that they will have doesn't scare me. But for the average person, what you need to look at is where am I? What's happening with the country? What's the government saying about it? And what's private sector doing in terms of jobs and where I stand in relation to that. So I think that at the end of the day, the engine that drives the Bahamas, of course, is tourism. We need to diversify, but looking at where we are and what's happening, you begin to see that 2021, we began to move moderate recovery. The numbers of tourists are increasing. There are new industries that have sprung up. And so I would tell persons to relax, focus on themselves. There are a number of things that we can do when we talk about saving and investing, but allow those things to develop around you and become a participant in them.
Nolan, from where you sit as well, when people hear these numbers, when they look at what's being discussed sometime at the legislative level, they're not always understanding what's happening. You hear big numbers, you see things going on, but people don't always get a sense of where we are. If you had to sort of answer that question to say to the average payment, where are we economically or in terms of the economy, what would you say to them?
Okay, so for the most part, I would harp on exactly what Keith mentioned. You have to take those numbers more or less with a grain of salt. The numbers themselves represent where we are as a result of the pandemic and the initiatives that the government would have put in place to sort of protect us while we would have had this continued lockdown period. So you look at the numbers, you have to take into consideration that in order to fund these types of initiatives, it costs money. That comes directly from the public purse, and because of that, the debt burden would increase. So as Keith correctly mentioned, individuals themselves have to look at their spending, look at themselves as their own sort of micro aspect of the economy, focus on their own funding, focus on their way forward, finding niche areas that they themselves can exploit and, you know, provide for themselves and their family.
You talk about savings. I've got a mortgage, I've got a car payment, I've got kids, whether they're in public or private school, I've got regular expense. I have all these things, and plus I want to live, you know, but you want to talk to me about savings.
Right.
How do you balance that? How do you begin to tell people, start putting money aside when the realities of everyday living are becoming harsher and harsher, prices are going up. Right. The things that we were able to do 2 years ago, financially, some people just aren't able to do. A lot of people have been out of work and they're trying to get caught up. How do you tell people at a time like this, save?
Well, first of all, you've got to be real and talk reality to people. When you're sick, you lay down, you drink your fluids, and you don't get out of bed.
Right.
Okay, the economy was sick. Things around you were sick. Things were not happening the way they were normally. Therefore, you shouldn't be expecting to be acting normally. This is not normal. And normal, the line for normal is what you did in the past. Now, I'll also say that what you did in the past would not have been correct in the first place. People, all of us, have a tendency to live beyond our means. Our society is built by consumerism, spending. I've always said that saving and investing is a mindset. That's something that is ingrained in you from very young and has to be built up over generations, and it becomes a part of what you do. So you've got to change the narrative and change the conversation, Jerome, to get to that place. So,
Minister for State Michael Halkitis said recently that the Davis administration agrees that improved revenue collection is important. So government obviously makes money by revenue collection, eh? We agree on that. He also said that we are aware that we simply cannot rely on an expected uptick in the economy over the next few years to be sufficient to cover our deficits. So the previous administration, and even this one to a certain degree, you incur debt because there were some things that had to be done to sustain the economy, to sustain people. We borrowed a whole lot of money. That's not up for discussion. We did that, okay? So when he says something that we can't just rely on revenue collection, we can't just rely on an expected uptick in the economy. When you hear something like that, what does that say to you? What does that mean, and what does that say to us?
Okay, so I guess I'll take this one. So really what he's indicating here is that the government itself is going to have to find other methods of, you know, levying its own form of taxes. We can't simply rely heavily on tourism, because at the moment the tourism product is at a standstill, and as it starts to recover, it's only going to recover slowly, and that's been projected by the IMF in their own report. So what he's looking at is an increase on the level of the consumption tax across the board. So while the government would have been looking at reducing VAT, they're looking to spread it across other areas that, you know, would have previously been left untouched, so as to, you know, generate a little bit more of income for the government.
If I may, Jerome,
Sure.
I think one of the key factors for a government is being efficient, doing the things that you're supposed to do, and doing it efficiently. So therefore, there are a number of leakages or areas where the government hasn't been as efficient as it needs to be in the past. So I would say that, you know, and Mike, Minister, I know him well, so he's speaking to the fact that if they do the things that they're supposed to do, that too will help to alleviate some of the pressures that the government is seeing, with potentially not having the level of return in terms of the tourism product.
Do you think we always appreciate, as a people, what it takes to run a government? We want all of the free things, I call them. We want healthcare, education, social services. We want all of these things, but we're not interested in paying more taxes.
Well, all of those things you mentioned, the government takes care of them, and a lot of them are given to us, I won't say free, technically free. You go to university now, it's covered. You go to the hospital, it's covered. You pay very little. Those things need to be paid for. And you also want trained professionals to administer those things to you. You have to pay those individuals. Where does that money come from? So I think people need to really appreciate that government revenue comes from the people. That is one of the key elements of a government, their ability to tax. Personally, tax doesn't scare me. It's the usage and deployment of that tax which is more important. And I think the closer people and the more intimate people become with tax and taxation and understand it, the better off we'll be as a country.
Do you think we need more education in terms of how our tax dollars are being spent, and if you are being taxed, what those monies are being used for? And we've heard it, especially on the political stage, oh, where the VAT money gone? And you hear it tossed around all the time. And then there's always the defense of how the money was spent. But do we need to do or do governments need to do a better job of explaining to our people, one, why taxes are being levied and how they're being spent?
Yes, I think the government has a level of outreach that they need to improve on in that very same regard. It goes beyond, I would say, the government. It's an individual perspective. You have to become more financially savvy so that you understand why the government is doing what they're doing in terms of taxes. Now, we actually can come together as a cohort and really force the government to let us know, you know, what they're going to do with the money that they're receiving in the form of taxes. As we know, most projects that the government undertakes, they actually publicly indicate where these funds are being earmarked and going. Now, we need to hold them more accountable for that.
Well, you're also talking to two people that come from an industry that deals with transparency, fairness, access to information, immediate notification of important materials.
So you said these things aren't paramount with government?
Well, not that they're not paramount. It's just that it's with us, that's at the forefront.
Okay.
There are many different things that the government does, but personally, you're talking to someone that will advocate full disclosure, continuous dialogue.
So do you think that that's part of the problem? People feel as if there is not transparency, they don't know what's going on, even though the information may or may not be there. Is there a perception that there's not that transparency?
There is. Some people saying that it's not there.
Yeah.
I think that the governments, successive governments, the last two in particular, have done a good job of moving in the direction of getting information out there. They continue to do that. The websites and social media is getting information out there. I think there needs to be more of a reservoir of information and a holding location where persons can go and access this information to gain the information, to gain the knowledge that they, and we always talk about, to make informed investment decisions. Well, government should provide that to us as well. And I think they're doing a better job than they did in the past.
All right, come January 1st, VAT will be officially reduced to 10%, a 2% cut across the board. Among the many changes, the elimination of the zero rating under VAT on certain items, loosely translated meaning that VAT's going to be reintroduced to certain items like bread basket items. Also, a study done by the International Monetary Fund in September said that narrowing the base of VAT through zero rating and exemptions reduces efficiencies, lowers revenue, and increases administrative compliance costs. The government, however, believes that this will help the Bahamian economy. Who will benefit at the end of the day? On the surface, you say a reduction in taxes. Oh, that seems like a good thing. That's a positive. But who will it really benefit at the end of the day?
Well, quite frankly, I think that story has been left to be told. Economics will let you know that that's a double-edged sword. While you are, in one sense, lowering that nominal value from 12 to 10, yes, you're providing a little bit of recompense to the taxpayers, but that's money that they're going to have to still spend in other areas that they didn't have to spend before. And as you know, the lower income, more middle income individuals will spend heavily on bread basket items. So technically you're going to increase the cost at what would have been considered, that the food store. You would increase that cost of expense for them. So
Go ahead.
yeah, so you're going to increase their cost, but you're also going to decrease the government's
money coming in.
Yeah.
I listen, at the end of the day, I told someone, I said, because they asked the same question, I said, go to the food store, buy what you normally buy, and then where you see, I think it says VAT free, or there's a code on it. Just add the VAT to that, and see what you spend before and what you spend afterwards. Invariably, that number is going to be a little bit higher for the bread basket items. I've been meaning to do it every time I went to the store. I keep forgetting, but it's going to increase the cost, and it's going to lower the income, and that's the reality.
We're going to take a quick break, gentlemen. I want to pick up on this discussion and a lot more. You're watching On the Record. We are back right after this quick break. Every new season of On the Record, we push the limits, venture into unknown territory, take our cameras into places unseen before. We share the stories and experiences that affect us all. And now it's time for Season 5. On the Record, Thursdays at 8 p.m. on RTV, cable channel 212, and streaming live on Facebook. Welcome back. You're watching On the Record tonight. COVID-19 hasn't just disrupted the healthcare industry. Global economies remain on a roller coaster as well. The emergence of a new strain sent markets into a tailspin this week. Even in our own experience, the resurgence of tourism is again threatened by the events of this past week. Tonight, our topic is the economy in review. My guest, Chief Executive Officer for the Bahamas International Securities Exchange, Mr. Keith Davies, along with Nolan Johnson, Trading Representative and Managing Representative for Alliance Investment Management, as well as Benchmark Advisors. Gentlemen, as we went into the break, we picked up this whole issue of the change in value-added tax. Government has indicated that officially as of January 1st, there will be a 2% reduction in value-added tax. A study by the University of the Bahamas' Public Policy Institute says that cutting the VAT rate to 10% will only slightly improve job creation and economic growth. The report also warned that the 2% cut would worsen key fiscal indicators such as the fiscal deficit and the debt to GDP ratio. Now, when we talk about that, it sounds really good on the surface. Whenever you talk about cutting taxes, that seems to bring a sigh of relief. But once we delve deeper into this, as this report has indicated, it may only slightly improve job creation and economic growth. But there are some other things that could worsen as a result of that. There's a balancing act, eh?
There is, and I think the best case scenario, it doesn't diminish the government's revenue that much, and best case scenario for the consumers that it doesn't increase prices that much. That's the best case. Thank God we have studies and that can be done and looked at it. But I think the difficulty is, Jerome, in reality, not until after the fact will we really know what the true impact will be.
Sure.
I think that we simply need to weather this change, welcome it, embrace it. Government's made it, let's live with it.
This week, as I indicated in the introduction to the show, we saw the emergence of this new strain of COVID-19, Omicron, as it has been named. We saw international markets just sort of reeling from this. Even in our own experience, there is now this real concern about this putting a damper on our rebounding tourism. When we hear this news, having lived with COVID now for almost 2 years, I thought to myself this week, good Lord, not again. And people legitimately would have taken pause and are concerned. What do you say to folks now who are just worried now what the next few months are going to bring for them?
Okay. Well, it's going to, Jerome, bring again very much the same. So we're going to have the possibility again of the continued work from home process, the continuing demand for individuals to go ahead and be vaccinated, to continue to carry out the healthcare protocols, social distancing protocols. Mm-hmm. That'll be the only way at the moment we can attempt to remain safe.
If I'm working in a hotel, if I'm working in a vulnerable industry, what should I be doing now? We get ready to go into Christmas. Right. So I want to buy gifts, I want to paint the house, I want to get new furniture, I want to do all these things because, it's Christmas. This is what we do. From a financial perspective, what should I be doing in my own personal space at this juncture?
Well, what you should be doing, quite frankly, is focusing on your immediate expenses. There'll be some things that you will have to forego. So the expensive Christmas gifts, that will have to wait. Ensuring that your house is fiscally sound moving forward is going to be your #1 priority.
Fiscally sound don't mean painting the house.
No, it doesn't.
Okay.
It doesn't. It doesn't. I don't think COVID is going to care about whether or not you put a fresh paint of coat on the house or not. But ensuring that your immediate bills are kept up to date, that's going to be at the forefront. Ensuring that you have food and complete safety and shelter. That's of importance.
Keith, when we look at this, as I said, we would have been dealing with this for almost 2 years. There's a possibility now that we may be dealing with another variant. Even from a personal perspective, what opportunities do we need to be looking at, or different ways of doing things with the possibility of going into another lockdown situation, heaven forbid? Well,
first of all, there is COVID fatigue. I am tired of it. You are tired of it. Everyone is tired of it. But the reality is, it is still a pandemic. I always tell people that we're rebounding, things are getting better. No, they're not. We are still in a pandemic. Never forget that. And as such, you need to comport yourself and conduct yourself in that manner. What that means is that you need to think about, as Nolan said, making sure your personal integrity is in place. Making sure that those around you understand that you won't be able to do the things that you were able to do in the years past. And I'm not done, that's 3 years past. Because the last 2 years you've been in lockdown. The reality is that they've warned us, the health professionals warned us that a new variant was going to come. This is not a surprise. I'm not surprised. And quite frankly, there may be another one in the future. This is our new reality. So you need to start doing things today, putting aside, my grandmother always said, in times of war, prepare for peace. Times of peace, prepare for war. We're in a war right now, okay? Prepare for peace. Prepare for those things when there are easy times. So put things aside. Start looking for that saving opportunity.
There are still so many of us, though, in this economy who are still in such vulnerable places. The straw market has just opened. Those other businesses that rely heavily on tourism have just started to come back. I mean, Bay Street, again, looks like Bay Street stores are open. People are moving around. But here we are on the verge of a possible variant coming back. I mean, again, if you find yourself in those positions, if you are that straw vendor, that small business owner who is directly affected by that, who has started making money again, what kinds of things should you be thinking about right now at the possibility of us regressing?
Well, first of all, if you're making money, you have income, you need to save it. You're not going to spend it. And if you do spend it, and I understand the reality, if you are going to spend it, you must think of how much can you afford to spend in the event that tomorrow I'm not working, or I'm working now 3 days instead of 7. You need to begin to put things aside to prepare for the eventuality that something could happen. Again, I talked about a mindset. You've got to have that saving mindset to begin to replenish that nest egg that you had, that safety net that you had. Now you say, well, Keith, man, I lost that safety net a year ago. Well, I understand that, but you've got to start to build and move in that direction. That's all you can do.
How much of your money should you be investing at this point if you have that opportunity? I can tell you there was a time during COVID where I found myself I wasn't spending money because I wasn't going anywhere. And I started looking at my funds and I said, you know, maybe I could start doing some investing because I've got a couple dollars here that I was not spent, or, you know, funds had been diverted from somewhere else. I wasn't going out, I wasn't going anywhere, so, and not, you know, I don't want to come rob me and say, Joe, I've got plenty of money. You know, and even now, if you are back working again, should you be looking at the possibility of investing your money?
So the answer to that is yes, a resounding yes. So while it's very difficult to actually put a cap on what you should be investing, I recommend that people take about 20% of their disposable income and put it into investments.
What's disposable income now?
So
that's tricky.
Right. So disposable income really refers to everything left after you've paid all your immediate expenses.
Okay. So 20% should go towards?
20% should go towards your investments.
Okay. An investment does not include going to the number people to spend.
It certainly doesn't.
Putting it out there.
Not by a mile.
But that's
recreation.
That is a huge part of what people do for recreation.
Right. You know what? Let me say it this way. That's an investment. It's a poor investment.
Okay.
Okay. And when you start talking about savings and investing, what we start and end with is education. When you begin to educate people about how you can deploy money, just understand this. The way the world works, I have $1 today. I can buy 3 of those things, whatever those things are. In a year's time, that dollar can only buy 1 of those things. So you've got to put your money to work so that in a year, you can now buy 5 of those things. Break it down as simple as that to someone. Mm-hmm. That's the reality of your money today. So if you don't put it to work for you and invest it like Nolan said, the result is you're going to be poorer in the future.
Good note. Now, before we go, I want to give you an opportunity to talk about an initiative you all have that people can benefit from. And we're talking about opportunities, eh?
Yeah. You know, one of the fundamental principles and policies of BISICS is to facilitate investor education. Financial literacy is vitally important to us. And I'll just put a plug here. We want to work with the Ministry of Education and the new Minister of Education to facilitate expanding financial literacy in the schools. And so we'll be reaching out to that ministry along with our broker-dealer membership to find ways to expand financial literacy. But what we're doing also, coming into the new year, we have a campaign called Invest Like a Boss.
Invest like a boss. I like that. All right.
We want people to level up their income and find new ways to expand their personal finance. And we talk about savings tips, nest eggs, and strategies that people can use. It's going to be free of charge. We're not going to charge people for this, because that's something that we should do intrinsically as a national stock exchange. We have a campaign coming up in this month right now, and it's called, my people are going to kill me if I don't get it right. We're giving a giveaway, $500. We're going to seed someone's investment portfolio. And they should check our social media pages. On Facebook, we're at BISICS Exchange. On Instagram, we're at BISICS Bahamas. On YouTube, we're at BISICS Bahamas. And our website, bisicsbahamas.com, for information. We want new investors to look at the terms and conditions, get involved, and one of them will be given $500 to invest through one of our broker-dealers of their choice and get involved and start their financial investment journey.
Invest like a boss?
Invest like a boss.
Invest like a boss. We're also going to put something on the On The Record Facebook page as well.
Wonderful.
So people can be directed to see what it is.
Wonderful.
I like that. Invest like, I could, yeah, I well, all right.
It's a start.
I tell people all the time, even if it's $50 that you start with, start.
Jerome, we go into the schools and the kids say, well, I can't invest. I said, okay. What do you spend money on in a day? I said, if you put $1 aside, you put 50 cents aside. Investing is not the amount, it's the mindset.
It's a good way to end. Gentlemen, thank you so very much. When we return, new guests, more questions, different perspectives. Stay with us. You're watching On The Record. Every new season of On The Record, we push the limits, venture into unknown territory, take our cameras into places unseen before. We share the stories and experiences that affect us all. And now it's time for Season 5. On The Record, Thursdays at 8 p.m. on RTV, cable channel 212, and streaming live on Facebook. You're watching On The Record. I'm your host, Jerome Sawyer. There are signs that our economy is turning the corner. Tourism arrivals are up, hotel bookings are solid through the end of the year. Even Bay Street, once a ghost town, is again the center of our tourism activity. But what are the lessons here? What are the new opportunities that now exist, and how do we take advantage of them? My guest for this portion of the show, Angelo Butler. He's the Senior Financial Analyst at CFAL. Responsible for conducting research and analysis for investments. Also, David Slatter, who is the Vice President of Investment Management at RF Bank and Trust. Gentlemen, welcome to On The Record.
Thank you, sir.
David, you're no stranger. You're always talking to Christina during the news, but we're happy to have you in studio this evening to talk. So let's start, first of all, with what I call the state of the economy. Revenue for the first quarter of the fiscal year 2021-2022 was at $572.8 million. That's up more than 90%, which represents an increase of $272 million. Pardon me, I'm terrible with numbers. 25.5% higher than budget targets, and they say it's due to very strong rebounding numbers in tourism. So from the outside, it looks good. Tourists are coming, hotels are booked, people are moving around, and we see shops open, people are spending money, people seem to be making money. Is this trickling down to the rest of the economy? Tourism is doing well. What does it mean for the rest of the economy?
Well, I mean, there's definitely a recovery in the tourism sector, which is key for the entire economy because, as you kind of indicated, the revenue generated through this is basically us exporting the tourism service to the world. So the revenue generated through tourism does work its way through the entire economic system. So whether you are not directly connected to tourism, you're benefiting from the recovery. Now the recovery is ongoing. I think we've got a few more years until we actually get back to 2019 levels. So let's be pleased with the recovery, but let's not think that we've regained all that we've lost.
But there are some indicators that there are still some issues, eh?
Absolutely. And, you know, I mean, the key driver for our tourism sector is the U.S. economy. Fortunately, the outlook for the U.S. economy continues to be positive. So according to Morgan Stanley, the U.S. economy is expected to grow by 4.6% this year and another 4.8% the following year. And I think around 3.4% in 2023. So, you know, if the American consumer has disposable income at their fingertips, that bodes well for tourism numbers and therefore tourism revenue and the economy as a whole. So by 2024, I think we get back to where we were in 2019. So it's not over. We're still recovering, but recovering, and at least we are recovering. It could be worse.
I know, though, there are some concerns about inflation and what's that going to mean for us.
Right. So inflation is a concern for the U.S., and most of what we consume is imported, whether it comes from the U.S. or through the U.S. So inflation is a concern for us. At RF, we think inflation for the Bahamas is going to be close to around 4% at the end of 2021 and around 5% in 2022. So if you're an individual or a business, you have to factor that into your decision making. So when it comes to a personal household budget, you should be expecting prices to continue to go up all through 2022. So what does that mean? That means you're going to have to tighten your belt. You're going to have to cut back certain items that maybe you consumed or used in the past. You're going to have to do some belt tightening. It's only rational to expect prices to continue to go up. And yeah, so it requires discipline. Discipline at the household level, discipline at the company level, discipline at the national level.
It's interesting you said the word discipline, and I smiled, Angelo, because we're not a people that exercise discipline when it comes to our finances. We're not disciplined with our spending. We're definitely not disciplined with our savings. But, you know, is this really now an opportunity for us to rethink, rework, redo some things?
Yes, I think we're being forced. We don't have much flexibility, both at a national level and at an individual level. I think we see that the government is, you know, financially stretched, so they themselves will have to make some decisions that show discipline, not just for themselves, but also to breed confidence in the economy, the investment community, and, you know, that will have to trickle down to individuals. So, you know, in the past, we were able to continue to kick the can down the road, as people would say, but I think we're getting to that point where, you know, we're hitting that wall, and we will have to make decisions, or they will be made for us.
So two things. What does that wall look like that we could possibly hit? And then when you say decisions will have to be made for us, what does that indicate?
So the government, you know, its ability to continue is contingent on its ability to generate revenues as well as borrow. And we've been able to consistently borrow. Since independence, we've run consistent deficits. But now you're seeing some concern in the market, particularly from the investment community, that, you know, the government's position is becoming a bit stretched, and persons are kind of taking a second look as to whether, you know, to continue to provide that funding. And I think we've seen in the papers where government officials have discussed, you know, participation in the bond market and their ability to fund their deficit. So, if the government can't fund its deficit, that affects everything. That affects payrolls, pensions, social services, security services, so just about everything. And so, in essence, as long as the government can borrow, we'll avoid that wall. But I think we're hitting that wall where persons are starting to take a second look and say, perhaps I need to cut back a bit until we see that discipline from the government.
You called it stretched. I don't know if you were just being very modest, but for me, it would almost seem a weakened position, because just looking at the numbers, let's talk about government borrowing, contained at 497 million. This is, of course, in the latest state of the economy. Government borrowing in the first period of the fiscal year was contained at 497 million. For the same period the year before, it was 921 million. National debt stands at 10.48 billion, representing 98.1% of gross domestic product. To the housewife, to the doorman, to the mechanic who's running his small business, that seems almost insurmountable. That's a huge amount of money. But what does that mean for those individuals, for all of us who are out there every day just surviving?
Well, there's kind of a point threshold beyond which adding debt at the national level is it reduces your economic growth level. Around 50 to 60% is kind of the ideal level, where adding government debt and the use of that borrowing for infrastructure and other social programs is beneficial to economic growth. Once you get past that point, it starts to erode economic growth. We're at that point. You said close to 100%. So what's happening now is the borrowing of the government is actually negatively impacting the ability of the economy to grow. And what is the impact for, say, the average person? Is that the government now has to allocate more and more of its resources to what? Funding interest payments, funding principal repayments. That means less money going towards security, going towards infrastructure, going towards social programs. So it's not unrealistic to think that if this level of debt continues, that you're going to see deterioration of infrastructure. So the ability to maintain the roads, the ability to continue to provide programs, social programs, becomes less and less. So the individual is going to start to see that the state of the island will deteriorate. There comes a point where the government has to use their discipline and allocate their scarce resources to fund what? Interest payments and principal repayments instead of infrastructure improvements, social improvements.
And that's a hard sell to people, because when you talk about paying back debt, that's not a tangible. As a citizen of the Bahamas, I want good roads. I want potable water. I want healthcare facilities. These are things that are tangibles that I want. And I'm figuring if I'm paying VAT and if I'm paying customs duties and I'm paying stamp tax and all these other taxes, I should be getting them in return. But what you're saying is if we continue along this line, I'm not going to have those tangibles, eh?
Yeah, I mean, it's the numbers. The numbers don't lie, right? The government could want to think that it can kick the can down the road. Individuals can want to have these things. But at the end of the day, they have to be paid for. And if the government doesn't have the revenue to pay for them, then the individual taxpayer is not going to receive them. It's tough, honest talk. So we have to be disciplined. The
alternative is, and I think this is what we need to express to people, the consequences of, continuing this, as well as, if you say, okay, we're going to focus on the roads and not focus on the debt or the interest payments, there's significant consequences to that if you were to default or ignore those obligations. And so, like he said, the more they take up of your budget, the harder it is to do other things, and the more drastic the impact of you not being able to access the capital markets is on the government. And so I think we need to be transparent with the population that these are the potential consequences. This is our debt stock. These are some of the measures we need to do to address this before it gets to an unsustainable state.
But those aren't the conversations we always want to have. Whenever we talk about austerity and cutting back, and it's not, and this is not to get into the politics of it, but it is not politically expedient. No government wants to have that conversation. But if the civil service continues to grow and you've got particularly that big debt, in payroll and all these other things, then if we're not having these conversations, we're headed for the wall that you talk about.
Yes, and that's pretty much what it has been. We've always taken the political approach. It's said that no leader will give its people bad medicine before an election, specifically. So we don't be honest with these things. We play politics about who racked up more debt than the others. But we need to begin to explain that, okay, this is the Bahamas' debt pile, how this was spent, how this was accumulated, and there are decisions we're going to have to make to address this going forward, or the consequences will be drastic, and they will include, tax increases, further burden on the citizenry.
And then, of course, there's the question of even the vulnerability of the economy. I want to reference statements made by the Prime Minister recently during the conference on climate change in Scotland. He said that 15% of the Bahamas' gross domestic product is threatened by climate change. A study published last year found that 74% of tourism-based jobs in the Bahamas will likely be at risk due to a Category 5 hurricane by the year 2100.
So, we're an island, a nation of islands, all very low lying, and we know that our economy is highly susceptible to external shocks. So whether it was September 11th and tourism shut down for 6 weeks, whether it was the financial crisis of 2007, 2008 and its impact on the economy, whether it was Hurricane Dorian, whether it was COVID-19. In other words, there are going to be other shocks down the road. The reason we need to be disciplined today is because there will be another shock. So imagine if a Category 5 hurricane hits the Bahamas in the next few years. We don't have the capacity to deal with it. So we need to be disciplined today so that, first of all, we avoid hitting the wall that was mentioned, but also to ensure that we have the capacity to deal with crises that will happen in the future. When you incur a large deficit, you're basically borrowing from your future generations. So if you're a Bahamian and you've got children, or you're thinking of having children, this debt is theirs. We're borrowing from them to spend it today. So keep that in mind.
Is the answer for us in some ways the diversification of the economy? We have lived a decent life as a country as a result of tourism and following up on that, financial services. During COVID-19, there were all these discussions about diversification and what we needed to do, and this is an opportunity. I don't hear those discussions anymore. It's let's get tourism back. Realistically, can we diversify, and how broad of a diversification or potential is there?
Well, I think we can diversify. At the onset of the pandemic, I remember all those conversations about how
every day
we would do backyard farming and this. But, I told some of my friends, as soon as we can get tourism back up, we're going to jump right back on that, because that's the quickest thing, and that will get people back to work as quickly as possible. I'm of the belief that tourism will always be the primary source of industry for the country. There are opportunities to diversify within tourism, look at ways to extract more from the tourists, given that it's going to be such a significant portion of the economy, as well as ways in which we get to keep more of that locally through local entrepreneurship and Bahamian businesses and providing more linkages there.
And we're going to go to break after this. This is a discussion that I think I've been hearing about since I was in high school. Like, I remember, we need to create more linkages to tourism. But we can't seem to get past it. What are the impediments for us really diversifying even more? I mean, we've seen some attempts over the years, and some people have done a good job, but there still seems to be, I'm going to go back to that wall, that impediment that keeps us from diversifying and doing more with what we have.
Well, there's some bright spots. I mean, if you look at the joint effort between doctors and Cleveland Clinic in Freeport, if you look at the new university that's being built there in Freeport, the medical university. So there's a case of, in effect, education, medical tourism being exported. So we can diversify the tourism product, as Angelo mentioned. I mean, and to a great extent, the more of that tourism product that is supplied locally, the less we depend on importation, the more foreign reserves that we retain. Sports tourism. The Tiger Woods Hero Golf Tournament is ongoing right now. The economic impact of that is pretty substantial. We're talking about, you know, millions of dollars in tax revenue. We're talking about millions of dollars spent locally, whether they're the tour operators that are transporting individuals to and from the Bahama to the golf course. So those are the kind of events and activities that we can expand on to diversify the tourism product.
Gentlemen, we've got to take a quick break. We've got to delve into our final segment, which is up right after this. Every new season of On the Record, we push the limits, venture into unknown territory, take our cameras into places unseen before. We share the stories and experiences that affect us all. And now it's time for Season 5. On the Record, Thursdays at 8 p.m. on RTV, cable channel 212, and streaming live on Facebook. This is our final segment tonight. We're talking about the economy. My guest, Angela Butler, Senior Financial Analyst at CFAL, conducting research and analysis for investments, along with David Slatter, Vice President of Investment Management of RF Bank and Trust. Gentlemen, last month, the Ministry of Tourism reported that ticket sales to the Bahamas were up by more than 100% over October. More than 158,000 visitors came to the Bahamas in September. There is significant pent-up demand for the Bahamas. How do we capitalize on this even now, even with the fear of a variant that could set us back? But how do we capitalize on this now from an economic perspective?
I think one thing we need to do is improve the perception of the Bahamas from a risk standpoint, from a COVID-19 risk standpoint. If we can take care of our own business, in other words, higher vaccination rates, then we're less of a risk from the perspective of the U.S., the North American, European markets.
Do you think people think about those things? So and because we are a tourism destination, do you think people really think about what the perception of the Bahamas is out there?
Unfortunately, I don't think enough of us do think globally. We tend to be pretty provincial in our thinking. It's all Bahamian-centric, but we need to have more of a global perspective. I mean, if we're selling our product to the globe, we need to know what our customers think. All right, and if they think we're a risky place to travel to, there's alternatives. They'll travel elsewhere, or they won't travel. So we have to think about that.
I mean, I think you see it on the group side of business more so. I think companies, and I think a significant portion of our tourism product are those large group conferences. And, you know, as a company, do I want to send my staff, 200, 300 persons to the Bahamas at a time when the risk is high? So, and I think only when that segment of the tourism market comes back will we see a full recovery of the tourism sector.
As with most booms, there is the inevitable bust. My question is, are we on the upside of that bust, or are we headed for another one at the end of this recovery period?
I think what we're seeing is resilience in the demand for the Bahamian market. I think, even if there are new variants, I don't see us ever getting back to, March 2020 or a full-on bust again. But at the same time, we don't need to rest on our laurels that, we're strong. People are always going to come back. It's time for us to use some of this increase in activity to get or diversify into other sectors. The agriculture, expand, and this is nothing new, right? We've been saying this for years, expand the agriculture, use some of this revenue to try and expand the use of renewable energy, look at ways we could improve the yield from our natural resources. We have seen a lot of discussion in the papers. So let's not sit on the fact that this has come back so strong, and it seems to always come back, but let's start getting, things going on the other side of the economy.
I want to talk, use this last bit of time to talk about investing and saving and some other things that are out there that people may be looking at. In October, Pinnacle Franchise Brands Limited surpassed its minimum crowdfunding market through 950 investors, raising $1.7 million to ensure that Bahamians and others have a stake in the success of Red Lobster in the Bahamas and across the Caribbean. First of all, what is crowdfunding? To those of us that don't know what it is, you laughing at it. And how does that differ from traditional investments when it comes to raising capital?
Well, I know Angelo is directly involved with, say, the raising of capital and his role. But, right now when a business needs capital, there's the traditional, it's equity out of your own pocket, borrowing from the bank, or mezzanine financing through preferred shares or debt securities. Pinnacle is what they're doing is they're kind of providing an opportunity below, say, the mezzanine financing level, right? So this is an opportunity for individuals who may not have the ability to invest 10, 20, 30,000. Maybe they have $500 or $100 to invest, or 1,000. So it's good. It's an expansion of the capital markets of the Bahamas. So it's a positive thing overall, because the ability to raise capital is essential if a business is going to, first of all, start, hire people, add value, add wealth to the economy of the Bahamas. So it's a positive development overall.
How do I look at that? I may have a couple $100, or I may want to do something and say, hey, I want to invest. I need to do something other than trying to just keep my money in a bank, or spend it on the weekends. But why is this a good avenue for people to look at investing or even starting to grow their wealth?
Well, as you mentioned, the bank is not the place to be keeping your funds. I think you should only have money in the bank that you need to spend over the short term, as well as perhaps an emergency fund. But, with inflation the way it is, the cost of living is going to continue to go up. Persons are looking for ways that they can grow their funds to maintain that purchasing power. $1 a day in 10 years won't be $1 unless you invest it. And so, like you said, this is a good opportunity for smaller individuals to be able to participate. I would say it's important to understand that there are risks involved in investing. Securities and stocks can go up just as they can go down. And so, you have to read the documents properly, use due diligence, speak to a financial advisor if you're not sure. But it is a good opportunity to expand the capital markets and get funding to businesses.
I was going to
go ahead.
Tap on, the idea of inflation. So I mentioned earlier, we think inflation is going to be around 5% next year. So if your purchasing power a year from now is going to be equivalent to what it is today, you need to have a return of at least 5%. Otherwise, inflation will turn that dollar into 95 cents. Mm-hmm. So how do you get 5% rate of return? Definitely not by putting it in the bank. To a great extent, not by going into fixed income. You need to have exposure to equities in addition to, say, fixed income investments. That's where you get those returns.
Do we have enough of an appetite for that, for investing in this market?
I think the Bahamas is largely, from my experience, conservative. I think there's strong demand for fixed income. You put out a fixed income offering, you generally find it oversubscribed. I think persons are still a bit cautious about taking the equity risk. People want to see things go up.
We still believe in banks too now.
Yeah, but fixed deposits are non-existent right now. So you have to kind of venture into something. But persons are still a bit cautious, and I think it's on the broker-dealer community as well as the regulatory agencies to educate people about taking risk and the benefits as well as the risk of taking those risks.
The reality too is a lot of people hear about investments and they'll watch the show and they'll think that's something beyond my reach. There's no way I can get involved in that. And what you do is about educating people as well. If people want, if you say to yourself, you know what, I want to do this, I want to put my money elsewhere where I can see it grow. What are some of the basic things that you need to do in the very beginning? Where do you start, I guess, is the question.
Yeah, both firms that we work for, I mean, it's quite simple. You can open up a mutual fund account, or you can open up a brokerage account. It's fairly straightforward, and then you can use that as a way to pool savings over a period of time until you have enough for that initial investment. And in most cases, we're talking about $500 to $1,000 to make that initial investment, say in a mutual fund. So if you can only afford $100 a month, you open the account, you put in $100 a month, and after 5 months, you can make that initial investment. And you need to get in the habit. It needs to become just part of your normal budgeting routine. Every month, a portion of my salary goes into that investment account. And that's what you do. I mean, I was just running the numbers. So through October, of all the stocks listed on BISX, there's only 2 that are in negative territory. Everybody else is in positive territory, some substantially in positive territory. So people don't realize that, you know, BISX, the local equity market, is a great way to build wealth. It's not as liquid as we'd like, but it is more liquid than people think, and the opportunities to get returns over the medium to long term are there.
I'm going to give you the final word on the show tonight. You know, people hope it's the end of the year. People are looking at what they've done, but also looking ahead. You know, how do you set your financial goals for the new year? What do you say to yourself? You know, hey, it's going to soon be a new year. I've got to do some things differently where I want to. How do you begin to now set your financial goals for the year?
Well, I think this is a period where, you know, we've had a long year. It's been mentally...
Feels like 2 years.
It's been mentally draining, mentally exhausting. So this is a time where people are going to kind of want to relax and kind of get away from being, you know, so tense and serious about everything. So, you know, but at the end of the day, just keep in mind that going ahead, there are challenges. There's a year ahead. There are challenges that will come with that year. And if anything COVID has shown us is to always be prepared. Right? We don't know exactly when things are going to happen, but they are. So, you know, just keep that in the back of your mind. Don't put yourself in a bad position this December to suffer through 2022.
Well, listen, you could not have given better advice. Do not put yourself in a bad position this December. You know, December, and we seem to just go crazy. We want to spend, we want to do all the things. But to your point, you know, if you are able to do a little something to relax and enjoy the holidays, that's what it's all about. Gentlemen, thank you so very much. We've had a great discussion. I really appreciate it, given some valuable information and a lot of food for thought for all of us. All right, thank you very much.
Thank you.
That's going to do it for this episode. Thanks to all of my guests tonight. Special thanks to my technical and production staff. We'll see you next time, same place, right here on The Record.